Good afternoon. Today is Tuesday, the 14th of August, 2012, and this is Brian Shannon from AlphaTrends.net. The market, it was up 2 pennies today on the S&P 500, but we did see that it broke beyond the recent range and then kind of came in a little bit hard there towards the end. Actually, let's take a look at the 1 minute chart in the last hour, but in the last 5 minutes or so, we did get a pretty good little bounce. But let's take a look at the 10-minute time frame. So this is what we've been talking about here: is these higher lows have been kind of compressing up against this resistance that had formed at about 140.85, right around in that area. So today, obviously, we gapped higher, and when we gapped higher, we got right up to daily R2. And again, daily R2 is a lot of times an area of intraday resistance, and it definitely is something that you want to be aware of in the individual stocks that you trade, as well as in the indices. You also want to be aware of pivot and daily S2. R1 and S2 a little bit as well. There's a great tutorial at alphascanner.com for that. But if we take a look at the 10-minute time frame, we did break beyond that resistance, and it kind of looked like it was going to hold above it, but we were still below that volume weighted average price. So there was a little battle here going on mid-afternoon, and then late in the day the sellers kind of unloaded there, and it brought us back down, touched on the 5-day moving average. So when we look at the daily time frame, we still have a nice uptrend obviously intact. This uptrend has gotten a little bit extended though, and it does raise the possibility that we get one of those moves where we get from a failed move comes a fast move. And the psychology of that is basically that people have been waiting for this market to break out, so they chase it higher. It fails, and then they spit their stock out at the end of the day. Also, shorts, people who had been short and anticipating weakness over the last week and a half, even though there's been no technical evidence that we should be trying to short it. In fact, just the opposite. Those shorts capitulated on the open as the sellers regained control. Some of the weaker longs decided to get out, from this morning and take their losses, and some of the short sellers who had been chased out on the open reestablished their position. So now the buyers, there's just an absence a lot of times of buyers here. Again, right into the close, we did see some further for buying, however. So it's not dead. It's not bearish here. It's extended. The market's gotten extended, and now we have the possibility that from this could be a failed move that leads to a fast move lower. Obviously, we've got important support just below at about 139.75 to 139.90. Basically, this is our more important band of support. The great news for me is I'm going to be on vacation the next 4 days, so I don't have to deal with this mess. But if I were, these are the things I would be aware of. Is this trend line is kind of going to meet up with that prior little band of support as well, and then we've got the 10-day moving average down there as well. So again, it's we've seen this market. The volume has been declining. I posted a chart on that on alphatrends.net earlier today about or actually I tweeted it about how the volume has diminished on the rallies of the last few years, and we can see real easily that when this market's been rallying, a lot of times the volume has been declining. So a lot of people make a big deal out of the volume, but it's only price that pays. The Nasdaq did hold above its little resistance level near the 67 area. So we had gapped up beyond that 67 level, got up to the next area that we were looking for potential resistance at, and that being at about 67 and a quarter. We got up in that area. The sellers did take control here today, but it wasn't convincing that they're actually in control. I think that 66.50 is really the bigger level for this week, that if we kind of meander around here for a day or so and then get stuck below the 5-day moving average and then decline, well then perhaps we'll see a little bit deeper pullback. Even down towards I think 65 and a half would be a welcome pullback actually, because again we've gotten a little bit extended here recently. So be aware of that 66.50 area. We are still innocent till proven guilty. Now the Russell 2000's been a little bit tricky in here, and what I was talking about earlier today is we have this this trend line that actually, if you look at it, it's again, which trend line is more representative of what's been going on here? Is it the one that touches these couple of points, or is it the one that touches this point and this point? The fact is, it's more, again, kind of like a band of resistance that's formed in here. Now, this daily time frame, what we see is we could be outlining an inverted head and shoulders pattern. And the good news about the Russell 2000, so here we have some encouraging news, that is that we had a little shakeout on Monday. That got us down to the 20-day moving average. We have a rising 10-day moving average above that 20-day moving average, and a rising 50-day moving average as well. So we had broken this little pattern of lower highs and lower lows. We made the higher high. It kind of just stumbled around in there, little shakeout yesterday, and now we're still battling that $80 level. But we have in here this, if we can break beyond this $80.60 area, that also gets us beyond this trend line in here, and we could be setting up for a rather nice upside in the Russell 2000. So here again, we can kind of see even a bigger inverted head and shoulders pattern on the weekly time frame, and this right shoulder in here that we're looking at on the weekly is actually showing us an inverted head and shoulders pattern within that. So the Russell 2000, as we know, has been a big laggard this year, and we can see that on a percentage basis. This is the big level we want to see it hold this week. If we get below and stay below 78.90, then I think we have to become a lot more defensive, that it's possible we'll see a test of the 50-day moving average. The semiconductors were down 20 cents. Again, this market has gotten beyond a very important band of prior support and resistance at about that 32.90 to 33.10 area, and a little bit further pullback down towards that, even down towards maybe even 32.70 would not be a bad thing. I think it would actually be good for this market. Now, what we see here is that we've got a 5-day moving average, that's the orange line, and we've got it kind of flattening out here. If we drill down to a 10-minute time frame, we can see it a little bit further that we gapped up here today and kind of failed. This is the level that I've been talking about. This is the 33 down, even towards 32.75. I don't think would be horrible, but if we break below probably 32 and a quarter, that's a little bit of support from that last week and close to this week's lows. Then I think we're headed for 32.75 to $33 a share in the semiconductors, and I don't think that would destroy the semiconductors. I think it would be a welcome pullback, perhaps that even finds, well, that would maybe be a little bit too low, but I think it'd be a welcome pullback. The financials were down 2 pennies today. They did get up close to the highs from last week. In fact, right up against them. Don't go calling this a double top or anything. We don't have any evidence of that. 1485 is our near-term level of support. That is this week. We want to see it hold above that level. In fact, I think we could even just say $14.80. That as long as we hold above $14.80, then we still want to be somewhat optimistic about these financials. They got right up to this prior level, found a little bit of resistance, but it looks as though they are still healthy here unless it breaks below that 1480 level. So we're still, kind of got some volatility in these markets, and you look at gold, for instance. Gold, we've been talking about that it wouldn't be bullish until it got up above about 158. That's not happening. Gold was down a little bit further today. It'll be interesting to see if we create another higher low in there. Some of the leaders like Apple we spoke about, and it's been breaking out here. We had a little bit of a pullback here today. They got right down, actually, so this is Monday's move and this is Tuesday's. You can see we got right down to the 2-day volume weighted average price. So the volume weighted average price for the week as well. We've also seen Google have a real nice run, and this is breaking out to multi-year highs here if we look at the monthly chart. Now, I think it's gotten a little bit extended as it just came from 560 to 660, and even a pullback down towards 650 would be a real nice thing to see in the next coming days. But other than that, I think that Google is one to keep an eye on for a move probably up towards $800 a share. As I said, I'll be out of town the next few days, so trade them well, and thanks for tuning in.